Hello out there and good morning, traders. It is June 20th, 2024, and welcome to the Apteros DMI. Let's dive into our recap a little bit here. So there isn't really all that much to recap because yesterday was a holiday. I put out a DMI anyway, but the main reason why I did that is really it's twofold. The first reason is good habits. If you're, a novice trader or whatever, developing good habits is a really key part, good routines, let's just say, a key part to your development. And some of the things that stick with me all the time is even whenever I'm off or days I'm not going to trade or something like that, I still wake up, still do my prep, still do my analysis, and then even if I'm not trading or there's a holiday or whatever, I walk away for the day, and it just keeps me in that good habit, that good routine of waking up, interacting, and analyzing, and then moving on. But the other reason why I did that prep and I was really focused on it was because of the risk reward landscape to the upside. I was really curious to see how the ES was going to handle how far along we've come in the past, couple of days on this bullish move. And really, we've hit the final destination. That's why this DMI is relevant for today. The overnight session here for the ES has kind of pushed straight up into that main destination. And this completes the full risk reward landscape of what we could have planned in our whole entire framework for the ES to the upside. And that's why it's relevant for today. We're going to talk more about this particular move here and why this is important for today's session. But overall, that's why I wanted to do the recap. It wasn't really about like what had happened yesterday because there really wasn't anything that happened yesterday. It was more about what happened overnight here heading into this destination and how we've completed that risk reward landscape. So let's take a look at what's going on today. Okay, so having discussed a little bit of that risk reward landscape already, we're now looking at a situation where the upside has tagged those final destinations, and really there's not much for us to continue to press the upside. So, from the bullish perspective, there's two things that you have to understand about the bullish perspective. It is the what is picture. We are continually riding extremes on higher time frames, and our lower time frames are still in bullish locations with bullish ideas in them. So the what is picture is still bullish. However, we have more to just analyze than what's going on in the what is picture. We have to balance out recency. We have to balance out destinations, key rejections, all these kind of things. If you're an Adro student, you understand these things. So the reality here is, even though the what is picture is very bullish, we are at, completed zones in the risk reward landscape, which gives us really no inclination to want to continue to be bullish. So our contextual stance is that we're really neutral on the bullish side of this market because we've come out and done all of our risk reward work. So what we're really saying here is, if you look at a trade like this, let's just say the idea is entry and then this is the target, right? We have, over the last 4 or 5 days, we've come up, up, up from the entry. We've tagged intermediate targets, destinations along the way, and now we've come to that full target where there really isn't anything up here for targeting or continuation to the ideas besides just continuing to make new highs in this market, and that's pretty much it, right? um, so the reality here is that we've just run out of room to continue to be buyers. Now, along the way, as a market moves up, what's going to happen is we're going to get, time frame shifting to be bullish, things remaining to be bullish, and that's all well and good. That's fine. That is the what is picture today. But the destinations being reached creates a recency problem. And that's really where we come into with today's analysis. We have, the what is picture and a clear line in the sand for us, with scenario 1 being bullish up above that, scenario 2 being bearish down below that. Scenario 1 is more neutral because of recency, right? So we do have a line in the sand that has a bias associated with it, but recency is a problem. So the narrative to the upside is weaker today because we've run out of risk reward, we've run out of recency as well, and we're now just looking at a continuation type of trade. So if you have the process and the setup for continuation type of plays, that's what you'd be employing today on the bullish side of this market. However, on the downside with scenario 2, that would be more fresh market generated information. So if we ended up seeing something like this, this would be an opportunity that aligns with the destinations being hit. In other words, these areas up here would become key rejections for us, and we'd be looking to the downside and for the bears to hold and continue to press lower destinations for themselves. Now, if scenario 2 does play out, we have a first intermediate destination here, but our overall target on the full idea really is down into here, into the 18s for the ES market. And that's pretty much how the landscape lays out today. So just a quick recap on that. Scenario 1 is the what is picture, and it is continuation of the bulls holding this market. Scenario 2 would be a shift and a change in this market, a little bit more of a fresh opportunity without a recency problem. And we'd be looking at scenario 2 to the downside. First target being a little value traversal. If we end up seeing the continuation trade, which would be off of this lower edge here off of 49s, we'd be looking for lower destinations along these two neutral levels down below. All right, so trade well out there, mind your risk, and have a wonderful trading day.